Matt Bennett is a Windsor, Illinois farmer and former grain elevator owner. He is Channel Seed's grain marketing consultant and holds a Series 3 brokerage license doing business through agmarket.net, a division of JSA. Matt brings the producer perspective to the table, enriched with his extensive grain marketing background. He specializes in formulating risk management strategies for corn, soybean farmers, and livestock producers. Matt's analysis and commentary on the grain markets appears on various TV shows and radio programs across the Midwest, including Ag Day, U.S. Farm Report, and Agribusiness Today. A graduate of the University of Illinois, Matt and his wife Tiffany live on their family's Centennial Farm north of Windsor, where they are raising their 5 children. He owns and operates a 3,000-acre corn and soybean farm with his father while raising 60 head of Angus cattle. Take it away, Matt.
I tried to change my my date on my first slide to the 24th this morning. I did update every chart. It was as of yesterday's close, so we're up to date, okay? But how many of you guys feel like you did a good job marketing the 23 crop? 1 person, 2 people, all right, 3 people. How many of you guys feel like you could have done a better job of marketing the 23 crop? Yeah. Those are the honest people, right? No offense to the other ones. I know some of you guys did a good job marketing. So basically, 23 was a pretty tough year to market for sure, right? What made it so hard to market? It was dry. Well, it's always hard whenever you don't feel like you're going to have a fantastic crop on the way. Bottom line is this. It was a very challenging year because it was a very expensive crop that we put out. And at the same time, I don't want to get too far ahead of myself, but let's just say this. When you have extremely expensive fertilizer, what typically goes along with that? High price of corn, correct? How many of us might have been better served, there we go, to go ahead and sell some corn whenever we were buying fertilizer? And I know Monday morning quarterback, nobody wants to hear that. But one thing I've been telling people is let's at least think about that a little bit, write it down. Do you guys think we're ever going to get a chance to pay for high-priced fertilizer again? And that sounds kind of weird, doesn't it? But what do we know, once again, that will be going on if we're paying a lot for fertilizer? I just said it, right? Price of corn will be high. And so we've got to learn some from that. We're going to talk about the grain sell-off, profit margins, risk management's more about, it's more than just corn and bean prices, okay? And so that's what I'm getting at is this. How many of us had, for instance, big-time swings in our net income based upon the timing of our fertilizer prices or purchases versus selling corn in the last year or two? Yes or no? I mean, guys, I'm telling you, we put ourselves behind the 8 ball. We put ourselves in a very precarious situation. What adjustments do I need to make with lower commodity prices? How many of you guys feel like we need to be tightening our belt right now? Right? How many of you guys have spent a lot of money in the last 3 years? And gals. I don't want to leave the ladies out because my lady, she's, whenever Caitlin said something about realism, I'm always like, why are you always so pessimistic? She says, because I'm realistic, right? A week ago we were talking about the January report, right? How many of you guys watched the January report, saw the numbers on it? This first slide's a little dark, but I think it's kind of funny at the same time. If you've ever had a hedge account, obviously, sometimes the USDA comes for your hedge account. But regardless, the USDA had some very specific numbers that I think you got to take a look at. Where are we at today? What's the situation today? And at the far right, at the upper right-hand corner, you've got a set of numbers. Each one of those has a negative in front of it. Why is that? Because from one marketing year to the next, we see a deflationary environment. Every single one of these is lower. Corn's $1.74 lower. Beans $1.45 lower year on year. Actually, beans outperformed corn from one marketing year to the next by virtue of losing less price. Correct? I mean, what would you expect beans to do with corn down $1.74 over 1 year period? I would say $3.50 or more, typically, correct? I mean, that's just the way that the relationship works. So obviously, we're in a deflationary setup right now. Now, what's going on? Well, the managed money has basically said this. Managed money, big money players, who's investing in the markets, they've said we don't want to own commodities. In fact, they've got a 260,000 contract short position for corn alone. Okay, so what does that mean? How many of you guys kind of understand that they're going to have to cover that, and that could be supportive to the market? If they're short, what happens? They have to cover those positions, correct? And I've had people tell me over and over, well, they got to cover. Yes, I agree. They can stay short for quite some time, just continue to roll contracts. They have to cover. But what else do we know is going to have to happen, for instance, with regards to the 2023 crop? How much does the farmer own right now? Probably 10 billion bushels, okay? So yes, the funds are short 260,000 contracts, but for every one of those purchases, unfortunately, I've got a farmer on the other side of that waiting to sell, okay? Yes, I farm, I understand how it works, but the bottom line is this: we have to be real cautious whenever the funds are holding this huge short position, because they can stay short for a while if they want to. They need a story to buy. So we're going to talk corn. How many of you guys looked at the markets last Friday and said, yes, we're up a nickel? Anybody see the market on Friday? We're up 4.5, 5.5 cents. And then yesterday, what was the market doing yesterday? It was up 4.5 cents again yesterday. So this is what these rallies have done here lately. Come on, guys. I know it's early. We can laugh. That's what the rallies have done lately. Basically, we get all excited. So what's going on there? A, the funds are short. The funds are going to defend their position. B, on every rally, what are you going to see occur? Some folks are going to sell. There's a lot of selling that's going to take place. World corn production. How many of us made money in 21 and 22? Okay? How many of us made more money in that 2-year span than most 2-year spans in our whole career? Okay, so what do you think anybody else in the world made money in those 2 years planting corn? Right? That's why you've got 80 million more tons of production year on year. All right? What happens whenever the price of corn goes so high that it makes us that profitable? What do you want to do? You want to do more, right? We want to plant more corn. Everyone in the world wanted to plant more corn. So world corn production year on year is higher. If I look at how does this impact things, beginning stocks of 300 million tons right there in the middle to ending stocks of 325. Now, I don't expect you to understand the conversions and everything. What I'm telling you is when you go from the start of the year from 300 to 325 at the end, in simplistic terms, that means we're producing more than we're using. Okay, so that's a fact. That it appears we're going to produce more than what we're going to use. So I just want to ask you a question. What typically does that mean for market action? What should prices do if you're producing more than what you're using? It should be lower. And all I'm doing is I'm basically trying to be non-committal right now on what I think the markets are going to do. I'm trying to show you what typically happens. Let's just talk about reality, realism, if you will. What about the U.S. situation? So a 1.36 billion bushel carry is what the final USDA number was for this last marketing year. All right. Now, if I look at the new crop marketing year, could this fluctuate? Of course it could. Current projection is 2.16. 2.16 is 800 million more than 1.36, correct? 1.36 plus 800 is more than 50%, correct? What would typically happen if the U.S. balance sheet went up over 50% when it comes to U.S. stocks? Anyone? You should go lower, correct? You should go lower. And so here's the big question then. How much of this is already in the market, right? How much is already in the market? That's the big question, because several of us have been talking about this for quite some time. If you heard me talk a year ago, and I see some familiar faces, I was saying a year ago, I think we should be thinking pretty hard about selling some corn because we spent so much putting the crop out. Anybody remember me saying that? Okay? Because I've had guys come up to me, how did you know the market was going to go? I had no clue. I don't know. I'll be honest with you, I've got no clue. What I know is this: we spent a lot of money putting the crop out, and the price of corn was high at the time. Those were the two things I knew. And the way I try to run my operation is if I can lock in a worst case scenario, that's what I try to do. And I stay flexible in my plan just in case I'm wrong about everything that we're talking about. Now, I'm going to show you a couple different scenarios. How many of you guys have been watching some of these folks come out with their acreage estimates here lately? Like Farm Futures was 92.8. I've been running 91. All right. The reason I've been running 91 is last year you had an 11 million acre difference between corn and soybeans. Corn takes a $1.74 bath. Bean takes what, a $1.40 some bath. Which one of those do you think is going to lose acres? Corn, right? But we had a really, really good fall throughout the Corn Belt. I mean, everyone got all the tillage done they ever wanted to get done. If you wanted to put anhydrous on, you were able to get your anhydrous on. Correct? And so when you have that good of a fall, a lot of times you're going to quantify more acres than normal. And during the fall, corn looked pretty darn good versus soybeans at the time. Of course, that was over $5, $5.25, $5.30. That's a totally different story than 480 corn, correct? Okay, and so I'm going to go with 91 million acres. That's where I'm at right now. I may have to trend higher, but why am I 91? Because I think corn's going to come down, beans are going to come up, and I think that your swing acres go to beans. I think your swing acres go to beans, and I'll show you towards the end why I think that's going to happen. If I use 91 and 178, it gives me about, you can see it, 2.36 billion bushel carry. It's at the far right, second one from the right. If I go to a 182 yield, okay, with a 91, and just to further explain this, I'm using the same demand year on year. Will those change? Of course they will. But we have to have a starting point somewhere. If I use 91 million acres and a 182, it gives me about a 2.7 carry, okay? How many of you guys think we could see a 182 yield in the U.S. this next year potentially, or the year after that? How many of you guys think it's just a matter of when Mother Nature is going to finally cooperate, we'll see a 180 plus yield? Okay, 177 in 2023, and you're telling me you don't think we can get 180? Guys, 2023 was not a good weather pattern for a lot of us. We had timely rains, but we didn't have supportive rains throughout the growing season. And so our crop up where I'm at, you know, I'm an hour and a half northeast of here, you know, it was good. It was good. It wasn't great. It wasn't what 22 was for us. It was pretty decent. So let's look at Farm Futures numbers. 92.8, using the same demand assumptions. 92.8 at 178 gives you what? 2,659. What's 182 give you? 3 billion. Okay? And here's what I'm going to ask you. What is your marketing plan as a producer if you see Mother Nature cooperate one of these years? Do you have a plan in place? Do you have worst case scenarios locked in place? Because it's going to happen. It's just a matter of when. And what do you guys think is going to happen if we see a 2.7, 2.8, 3 billion carry? That's a fairly easy question, folks. What do you guys think is going to happen? 350 corn, right? You're going to go back to levels that a lot of people told me last winter, we'll never go back under $5 corn. I'm like, just wait. Just be patient. I'm sorry, but you say, well, inflation. We can't make this work. We can't make it work, right? Farmer can't make money here. Do you guys think the Chicago Mercantile Exchange gives a rat's rear end if we make money or we don't? Absolutely not. And if someone in the mutual fund business can make money off you and me, all the better for them. Okay? So we have to be careful in the assumptions that just because we can't make money at these prices, the prices are going to rally. Okay? Yes, they'll come up. Now, cash price standpoint over the last year, most of us enjoyed a better basis than what we had seen most years, correct? For the 2022 crop? Absolutely. Why? Because the big circles here are areas that grew a much larger crop in 23. 22 was an epic drought for a lot of these folks. And what do they have in common with all of those ones that had the biggest increases in production? What do those folks have in common? They have a lot of what? Got a lot of cattle, okay? And so what does that mean? They need a lot of corn. They feed a lot of corn, okay? And so why was basis strong? Because those areas were saying, you know what? We don't have enough corn in our area. We got to draw your corn to us. That's what you call like a corn deficit area. So if you're a local grower and you were fortunate enough to have a decent crop, then bottom line is your basis was out of this world. And I'll tell you exactly what happened in southeastern Kansas, a grower from Liberal, Kansas. He calls me up in the fall of 22 and he says, the local feed yard really wants my corn, but I'm trying to figure out whether to sell it to him or put it in the bin. And I said, okay, how bad does he want your corn? $9 a bushel. $9 a bushel. I said, what's your corn making? He said, $2.25. I'm like, what was your question again? He said, well, I always put corn in the bin on this farm. How many of you have ever made comment like that? That's what we've always done on this farm. Anybody ever done that? You guys are liars this morning. Now, come on. We make that comment all the time. I had the same thing happen to me. I was close to the Cowden elevator for Premium. It used to be a Tate and Lyle facility. We were about 10 miles away, and we usually haul in there. But we were putting corn in the bin that day, and the guy calls me up and says, I want you to bring that corn in here. Why are you putting it in the bin? What did I tell him? We always put it in the bin there. Guys, I make the same mistakes. That's why I'm able to talk with some conviction. He says, what do you want for your corn? I said, $7. He said, done deal. And his posted bid was $6.80. But you got to ask yourself, if I'm putting $9 corn in the bin or $7 corn in the bin, what does it take to get it out of the bin? Think about it. If I'm putting it in at $7, what's it going to take to get it out? Do I really think I'm going to get $7.50 or $8? Right? And so how many of you guys have done dumb stuff like what I'm talking about right now? Anybody other than me? Right? But we got to learn. We got to learn from these mistakes. But the basis we enjoyed a year ago is not going to happen this year. Why? Because those folks had a better crop. Let's just look at the specifics. ADM Decatur, what was their cash price for corn at the end of the calendar year 22? $7.04 at a 25 over basis. Now, how many times do you think we're ever going to see $7 corn again with a 25 over basis in the middle of central Illinois, where you raise a ton of corn? Right? That's not common. That is not normal. What happened at the end of 23? 473 corn with a 2 over basis. Now look at the gap there. Look at the disparity there. But one of the most impressive things to me is that you carried a $7 price with a 25 over basis. We're not going to see basis as kind to us for this crop that we've got in the bin as what we did a year ago. Ethanol margins. They are dipping a little bit underwater at the present time. But the beauty and the reason why ethanol grind has stayed really strong, part of the reason why my team was suggesting that the January report USDA could potentially raise demand for corn usage for ethanol up to 100 million bushels. They went up 50. The reason that we thought so is because most of these ethanol plants are very good at hedging risk. And so they lock in margins. And so ethanol grind over the last few weeks has been fantastic. And it's going to remain strong in our opinion. If you look, as we project on out, we look for them to stay quite profitable actually. As of yesterday afternoon, what was U.S. corn worth? Okay, I like showing this. U.S. corn was $198 a metric ton. Now this is freight on board. This is everyone calling you up and saying, okay, including freight, what's it going to cost me to get your corn? And as you can see, we're competitive with Brazil and Argentina. Ukraine has a limited supply, but they do have corn that they can put on the world market. There's obviously logistical concerns. We feel pretty strongly that U.S. exports are going to stay fairly strong. It's a really good thing what we saw happen over the last few days with some of the rainfall that we've seen. What's it done for us? Well, Mississippi River, definitely we're seeing levels continue to come up. That is something that we absolutely need to see. The one thing we'd really like to see happen is the same sort of weather pattern happen down around the Panama Canal. We're still having trouble being able to even get a ship to be scheduled to go through there. Why? The Panama Canal is not the ocean, right? It's lakes. It's a series of lakes. Then they have not been blessed with a whole lot of rainfall. So that's what the chart looked like as of the close yesterday. Obviously, we had a contract low close last week on Wednesday. Thursday, you went down and made a new low, but then you closed higher. You closed higher Friday. You closed higher Monday, and you closed higher Tuesday. Now, what has been the net result of those 4 higher closes? Like 3 cents. I mean, it's not been great, but they're higher closes. It's better than lower closes, correct? And we were up on the overnight. We were up this morning. I don't know where we're at right now. If we're down, don't tell me. Just let's roll with this. At least we'll have a little bit of good news. But as you can see on the chart, it looks like we went down and made a low, and we potentially have forged a short-term low. Okay? I've been calling for a bit of a rally. Why? Because the market's been extremely oversold for one reason. And the other thing you got to ask yourself is how much more bearish information can we throw at this market than what it's already seen? Okay? Now, that doesn't mean, guys, that we're going back to $5 corn. Okay? I don't believe that's going to be the case. The only way you see it happen is with major help from Mother Nature in South America. And I don't wish ill will on anyone. Okay? But at least publicly, I don't wish ill will on anyone. But if they would happen to burn up down there, what do you guys think is going to happen? Right? We're going to get a boost in the market for sure. But as you could see, as far as world supplies go, you could burn up several million tons, and we're still not going to be in a wildly bullish situation. So be careful about your expectations. That's your Dees corn chart. Dees corn obviously doesn't look all that great either. Unfortunately, when you got below $5, a lot of folks said, "Dadgummit, why didn't I do something with $5 corn?" Right now, I want to tell you, don't get scared into making a sale based upon the fear that it's going to move lower whenever we haven't even planted the crop yet. This is a long marketing year, okay? We might get back into the game where we have to store it and manufacture some income out of our bins, okay? But personally, I'm in a wait-and-see mode right now. I'm 40% sold. It's in my newsletter. We have to actually say what we do. We have to do what we say, if you will. But we've been fairly aggressive. Why are we aggressive? Because we were putting money into the crop. And here's the thing that I want to be real careful about. A lot of growers told me, because fertilizer is so much cheaper this year, they weren't near as worried about going ahead and offsetting that fertilizer with the price of corn. I said, well, what if corn goes down another $1? And how many of you guys think that you could see sub $4 corn this next fall? Potentially. Anyone else? I think it's possible. So I can only assume you've hedged the daylights out of corn, right? And you probably have. I know you're a pretty aggressive marketer. But guys, if you think that's a possibility, what is your game plan? And I'm not saying I've got the magic formula. I'm saying this. There are tools that you can lock a floor in place, and if the market rallies, you're still going to participate. And you say, well, I don't want to get into anything too creative. I said, well, you know what? I'm telling you, the tools are out there. Some people say they don't want a hedge account. Now, I know a guy that went broke with a hedge account. How many of you guys have ever heard that said before? Well, he might have gone broke with a hedge account, but he wasn't hedging. He was speculating. He was gambling, right? You don't go broke with a hedge account if you're using a hedge account for what it's designed to do. It's designed to hedge risk. And if you don't know how one of them works, don't use one. But if you get with the right person, you can definitely market your grain in a much more, I guess you have a lot of different options at your hands. You can do a whole lot of different things that you can't do just making cash sales. So, world soybean production up 23.6 million tons at the upper right-hand corner. On Argentina alone, it looks like we're going to basically raise the entire situation, 25 million tons. Why? Because Argentina had such a horrible crop last year. Half a crop is what they produced. They kept thinking they were going to get the rain. We've seen it happen over and over and over again down there over the years where they finally get the rain, they end up with a decent crop. They didn't get it last year. And so how many of you have read about how Brazil's crop has been hurt pretty bad, right? It's been in the news. We don't know exactly what's going on down there, but this is one thing that I know. I need to take 25 million tons out of the Brazil crop if Argentina is going to be 25 over a year ago, just for South America to be status quo, correct? So be careful in your assumptions based on Brazil alone. If you look at how does this impact the balance sheet, if the USDA is correct, and I think there's a lot of moving parts here. For instance, what if Argentina gets hot and dry and stays hot and dry? Because right now they're hot. The forecast is that they're going to stay hot. If that's the case, you could trim some of that 50 million ton crop. But if the USDA is correct, we're in a stocks building situation with soybeans as well. Okay? We got to understand how that works. Now, if I take 20 million tons out of this thing, and it puts me down around 95 million tons, I'm just 3 million tons below where we started 2 years ago. Okay? Would that be supportive? Yeah, of course, it would be supportive. There's no question. Demand would adjust, most likely, and you'd probably see prices go up just a little bit. But bottom line is this, there's a lot of moving parts here. In soybeans, I think that you've got the potential maybe to be a little more reactive to South American weather than with corn right now, okay? The big time for corn is going to be, of course, when the safrinha crop is in the ground, and that's going to be another couple months down the road once it's in the ground and we're watching weather to see how it does. I'll talk more about it in a minute. U.S. soybean supply and demand. You took soybean balance sheet up 35 million bushels, okay, to 280. If you take 245 and you add 35, obviously that's more than 10%. So in the course of one government report, we went up over 10%. All right? It was a bearish report, okay? But 2 Fridays ago, whenever we were sitting here watching this report, the market was down like 33, 34 cents at one time, and then you closed down 14. That's a pretty decent sign. Yesterday, we were up 15 cents. There are people out here buying soybeans, and the reason that they're buying soybeans, in my opinion, A, we got oversold, and B, there's more concern about South America than what we've seen in the last several weeks. So if I take 87 million acres of beans, and I think Farm Futures was 85.5 maybe, okay? If I take 87 million acres of beans and I use a 52 bushel yield, it's going to give me about 425 million bushels. That would not be bullish. I don't know that it'd be the end of the world, but guys, we'd be taking stocks up significantly, okay? If I had a 55 bushel yield, it gives me 673. So if you get a rally in this bean market on new crop, you say, you know what, that doesn't look so bad to me, then I think I would be fairly aggressive in locking in a floor, okay? I'm not saying that I'm super bearish beans. What I'm saying is we're going to plant more beans this year than what we did a year ago, all right? Why, for instance, are the estimates for Brazil so high whenever they're in a drought situation? Because they're planting 3% more beans this year than they did a year ago. When you plant 3% more, what it does is it gives you the ability to have a heck of a lot worse yield and still raise a heck of a lot of beans. What's going to happen in the U.S. with 87 million acres of beans? The industry, in my opinion, will feel a sense of security that we're still going to have enough beans because we're planting so many of them. I don't want to be super bearish, but I want to cover my rear end just in case the market falls apart. That's what acreage looks like, the green line in Brazil, 18 straight years of increased area. People ask me, when's this ever going to slow down? I got news for you, it's not. It's not going to slow down. What does it mean for us as U.S. producers? Is the U.S. still the biggest supplier of soybeans out on the world market? No, not even close. Not even close, okay? And so the dynamics have shifted. Whether we're talking corn or beans, we are no longer the global powerhouse as far as the storehouse. Who's supplying the rest of the world with exports? Brazil's the #1 corn exporter. Brazil's the #1 soybean exporter. I don't expect that to change anytime soon. It's frustrating, but it's the truth. Brazilian farmer lobby, though, says that they think that this crop is a 135 million ton crop. The USDA is currently 157. Last year they were 160 once again. CONAB, one of the agencies down there, said they were a 155 crop. Most of your agencies have been above 150, but I'm telling you, if you can get this crop into the mid 140s in Brazil, it will be very supportive. I'm not saying you're going to go up $1, but it'll be supportive. Nobody really knows. Now, Eric Snodgrass will be at Springfield tomorrow, I believe, correct? Okay, this is one of his slides. I love this slide. What this shows you is from 1979 to present, what the rank is for these particular areas as far as how dry they were from October 1st through December 31st. Obviously, extremely important time in their production cycle for their first crop, soybeans. All right? Zeros, ones, twos, whatever. A 0 means it's the driest it's been since 79. A 1 would mean it's the second driest it's been since 79. Guys, this was an excessively dry time period. This is not common for Brazil. Okay? But this is what has happened. What it's going to mean to yield, I don't know. Obviously, towards the end of December, they started getting some rain. That was a well-publicized deal, but they're still fairly dry. Now, this is the size of the areas within their main production areas. Eric laid the actual sizes of these U.S. states in here just so you would understand how massive these areas are. Okay? Obviously, when you get to about, down to Sao Paulo, there in south, their weather was much better. But whenever you go Sao Paulo north, significantly drier. I think it's going to make a big impact. How much, I don't know. That's the $64,000 question. Okay? Now, at the lower right-hand corner, the dotted line is U.S. planted soybean acreage. The solid line is Brazil's planted soybean acreage. As I stand here today, I'm going to tell you that we will never plant more beans in Brazil again. It's not going to happen. It's extremely unlikely. Why? Because they're just going to continue to grow. They're going to continue to grow. They're making a ton of money. And I've told crowds this. I may have told you guys this a year ago. I was with a group at Farm Futures in Iowa. And this Brazilian grower said that they farmed 300,000 acres. Now, he's not the only one. There's several big operations down there. And he was asked, what was your gross income last year? He said, 250 million-ish. And, the moderator was Max Armstrong. He said, okay, well, what was your profit margin last year? What did net proceeds look like? He said, 35%. Well, do the math on 35% and 250. Right? What do you want to do more of if that's your situation? Everything you're doing. You see the nightmares of them trying to get those beans out of the countryside, right? But the bottom line is this: they can build roads. They can afford to build roads. And who are they getting help from? China. Because they want to control the flow of grain out of South America. And they are going to control the flow of grain out of South America. Don't fool yourself. It's going to happen. So you're going to continue to see them grow on a global scale. And I know at this point you're saying, gee, many Christmas. Is there any good news? There is good news. All right, we do have good news to discuss. I think there's a lot of things that could happen for us as U.S. producers that could actually be good on down the road. One thing that's not good is if the Brazil crop ends up where they say it's going to be, you're looking at the largest soybean stocks they've ever had. That would be a bit of a headwind on the market because they're going to be able to reward the market on any sort of rally, just like the U.S. producer this year. What do global stocks look like? If Brazil comes in where they think, global stocks are going to either be first or second largest we've ever seen. And so again, now, there's been a lot of times when global stocks were at record high and you had $12 and $13 beans. When was that occurring? When China's demand was going up exponentially year on year. 2024 is not that time. China's demand is not expanding. All right, their economy has cooled. Yesterday they mentioned that they are going to try a stimulus package, which we've seen how many of those in our country, right? But if China has a stimulus package, most likely you're going to see a bolster for soybeans because it could mean consumption could actually go up just a little bit as far as the pork sector goes. Now, what are beans worth right now? We're out of the market. If you look at U.S. beans, they're $30, $40, $50 out of the market. We are not going to export very many beans over the course of the next few weeks unless something crazy happens. Okay, why? Because you've got a captive supply out of South America. And freight on board, we are too expensive currently. So barring trade agreements, barring things like that, maybe logistical issues, you're probably not going to see very much in the way of export sales. Currently, the projection is that South America is almost going to triple us in the size of export sales whenever you talk about everything out of South America, 112.9 to 47.7. Do you guys think this is a concern? Anyone? You guys don't know how to ask because you know I'm probably going to trick you here. Here's what I'm going to tell you. I'm not super concerned about it, and here's why. We're talking about some pretty strong initiatives in this country. For instance, renewable diesel is gobbling up some soybeans, right? We're talking about sustainable aviation fuel. We're going to talk about all those things here in a little bit. Renewable diesel could take a ton of demand and basically put us in a better situation to where domestically we're using more of our soybeans. If we can use more of our soybeans domestically and we can tell some of our world folks, hey, in the past we had to export half of our crop, we were heavily dependent on you, and when you got your nose out of joint, the price of beans went down precipitously. Now, if you really want our soybeans, come and get them. You're going to pay for them because we're only going to export a third of them or whatever it might be. We're going to use beans domestically. That's where I'd like to be. That's where I hope that our government supports us on. And I'm not going into politics. I was asked about politics yesterday. I said, I ain't doing it, okay? That's a no-win proposition. Cash crush margins. What have we crushed beans for in the U.S. historically? Meal. Into rations, right? Mostly to feed hogs. What do we crush beans for today? Oil and meal. I mean, that's what it boils down to, guys, is that crush margins are $1.30 a bushel after a huge fall. $1.30 net crush margin, profit margin per bushel. What's that mean? People want both meal, they want oil, they want both. That's why margins are so good. And so you look around the country at all these crush plants, and I'll show you here in a little bit some of the different crush. Guys, here's the deal. If you're an originator or someone who's supposed to be purchasing soybeans and your crush plant goes dry when margins are $1.30 a bushel, guess what? You need a new job. You better not let a plant go dry whenever 24/7 you're crushing beans and it's $1.30 a bushel for every single one of those beans you're crushing. Okay? This is a good thing for us. Margins are very, very strong still, even after they've basically been cut in 1/3. That's your bean chart. I mean, same thing as the corn chart. We saw what we think is a bit of a bottom. We've got to hope that this trend continues. But March bean chart definitely looks pretty rough. In December, I was drawing a line from that summer low that you can see at the middle of the screen to the fall low off to the right. And I said, when you start to break this, be very cautious. Why? Because a lot of your trend followers, people who trade based on technicals, they're going to look at that and they're going to say, I don't want to be long beans anymore. And they're going to sell. And what have we seen happen since December? $1 bath. I mean, we've taken it on the chin in a major way. There's your November beans. It doesn't look quite as rough. You got beans down below $12. How many of you guys, look at what you've sold beans for in the last year or two and you struggle to sell $12 and $13 beans, if you're honest about it, right? I'll have people, I said in my newsletter, I think we need to be selling the heck out of $13 beans. And I had people call me up and say, well, I sold $16 beans in the summer of 22. Well, what the heck's that got to do with anything? I'm not trying to be a jerk. I'm just asking the question. What does that have to do with your 24 beans? Did anybody ever get screwed up in your thinking based upon what's gone on previously? I mean, I think we do. It's hard to combat that. But what we have to understand is, do you guys all agree with me that we're playing a different game in 24 than what we did in 21 and 22? Absolutely. So should we handle it differently? Guys, you could be a pretty crummy marketer in 21 and 22 and make a lot of money. I got news for you. No offense. Is that true or false, though? You didn't have to be good at it, and we could still make a lot of money. In 24, you may have to be really good at it to make money. So we have to be careful. So managing risk, this is the last part. My first slide, some of you may laugh, some of you may not. It kind of hits close to home. Here's your live look at 2023 corn profitability. I'll wait till the last guy goes down. Obviously, we're holding on to too much corn, correct? Yes or no? Most people, I think Sue Martin said on Market to Market, she said 68% is what the farmer has a hold of. If you looked at December 1st grain stocks, we were coming up with 65 or 6%. Okay, it takes a little time to figure some of this out, but the farmer is holding a ton of corn. All right, so obviously profit margins have dipped. They continue to dip. We have to hope for some sort of a rally effort that is not looking like it's in the cards currently. Okay, what could precipitate that? Something like this. Snodgrass says that if you get out into the spring, there's a chance that we could see the safrinha crop have issues as far as weather's concerned, drier pattern than normal. And so what you need to know about the safrinha crop is this. Typically, if you push soybean planting back for your first crop, think fall time frame. If you push that back, what happens to the planting of the safrinha crop? It gets pushed back. They want the safrinha crop planted in a timely fashion. Why is that? Because you get into dry season on the heels of pollination. Okay? And so most people are saying they're going to plant quite a bit more cotton this year. They're cutting back on corn acres. In bean acres, we're going to go higher. First of all, corn acres are down. We know that's going to be the case. Second of all, it's going to get planted late on average. So if you could throw some weather in there, it's definitely going to give the market something to actually find as a bullish influence. Guys, we haven't had a bullish influence for a while. It's been nothing but curtains for the corn market, right? I mean, it's been rough. But this could give us a little bit of a story. What else could give us a story? Different forecaster would be Drew Lerner. Anybody ever heard Drew Lerner speak? He's pretty good. I mean, he's a really good meteorologist as well, or I don't know what he calls himself, but he puts out a weather bulletin on a daily basis. Fantastic at what he does. His prediction is that next summer is going to be very dry in the Western Corn Belt again. Very similar to the 2022 situation that we experienced. Now, here's what I say, and I sent this to Eric, and I said, hey, what do you think of this? And Eric and I both agreed, because we travel a lot. I just wish the weather guy could get the next 3 days correct, so I know what my weather looks like, right? For travel. I'm tired of missing planes. I'm tired of getting things pushed back. I mean, guys, we can't get the weather right a lot of times. And Eric will tell you that. Eric will tell you that. It's hard to get it. But there are tendencies to believe we could turn off dry. Why? Because we're coming off an El Nino. We're going to enter into a time frame where we might not be El Nino or La Nina. And that's what Drew is basing this on. So it certainly is not something to ignore. Why do I bring this up? Because how many of you guys right now, based upon what I've been saying, based upon what your mind already thought, if you got a 30-cent rally today, you'd probably want to do something with the market if it comes out of left field. How many of you guys would want to sell if you get closer to $5, right? And so here's what I'm going to tell you. Of course I want to do something with that, right? I want to manage some risk. But guys, I want to be flexible because we're all sitting here bearish as can possibly be. What if a guy like Drew Lerner's correct, or Elwin Taylor, who says we've got an 87-year cycle? I don't know how you come up with an 87-year cycle, but that's what he's saying, that the 2024 is the year that we're going to see a drought. All right, so be careful as to get overextended, because the guys in 2012 that thought, you know what, we're $5 now, we're $5.50 now, we're $6 now, I'm selling 150 bushel an acre because it'll rain eventually. Boy, that worked out really good. Be careful. Stay flexible. Lock in worst case scenarios and put yourself in a position that you're not going to get strangled if you're wrong. Now, this came from our good buddy Susan. She writes the no bull column. Fantastic stuff. But she put this out. She's got a new one. I like this one better. And the reason why I like it is because it shows the companies investing in renewable diesel plants, crush plants that produce renewable diesel. Okay, so these crush plants that are going for soybean oil, where's the soybean oil going? Renewable diesel. How much renewable diesel is consumed in California that's produced here in the country? What percentage? Does anybody know? 97%. That will go to other states, folks. Federal government wants renewable to expand. Okay? And you say, well, big oil is going to fight it. Bull. Big oil is supporting it. And you say, well, why would big oil support renewable diesel if they're going to lose the sale of conventional diesel because of renewable diesel? Tax credits. Tax credits are profound for these plants. Okay? So if I am big oil and I know I'm going to lose market share from conventional diesel to renewable diesel, what should I do? If you can't beat them, what do you have to do? You got to join them. So they've become cozy. They've become friends. And they're investing together. All right? That's what the increase in renewable versus conventional looks like. Obviously, renewable is the one that, or biodiesel. So renewable is the one that's getting all the growth. Now, what do you think about this slide? And I'm not anti-EV. That's not where I'm going here. For those of you that are a little slow this morning, this guy's fueling up his Tesla vehicle, okay? This is a tough crowd. You guys have to participate a little bit more. Okay, here's the deal. Does big oil like ethanol? Have they historically gotten along with ethanol? That's an easier question. Because I know you guys are non-committal, because he's going to trap me, right? No, I'm not going to trap you. But guys, here's the deal. Big oil and ethanol, I've been saying, based on what my kids say, they're talking, or they're Snapchatting. I don't know what they're doing, but they're getting cozy. Like I don't know if they've hooked up yet, but there's something that's gone on. What's gone on is this. They have a common foe. Engine manufacturers, ethanol, big oil, they all have a common foe. Who's the common foe? EV. Do they want EV to survive? EV is going to survive. Don't get yourself wrong. But do they want it to grow? Last week, Ford said the Ford Lightning would no longer be produced at the level it is because they've had a lot of problems, right? Do you think that those people I just listed had a party? They probably did, right? They're fighting. And here's the good thing, is that they're trying to become more efficient. They're trying to become more carbon neutral. If they are going to become carbon neutral, they're not going to do it without what? Renewable fuels and tax credits. You're right about tax credits. Okay, so am I bullish renewable fuels? Yes. I love renewable fuels. And as a producer, I've had people come up to me and say, well, due to whatever administration supporting this, I don't know about all this renewable stuff. And I'm like, well, are you growing soybeans? Yes. I'm like, okay, I don't know. I can't help you. I'm sorry. Let's just quit talking right now. Okay? Here's what I'm going to tell you that concerns me. This is my concern. It takes tax credits to make bio or renewable diesel work. It takes tax credits to make sustainable aviation fuel work. What does that mean? They can't stand alone on their own right now. You're one stroke of a pen from some jackwagon in Washington, D.C. screwing everything up. That's what concerns me. Now, I feel pretty confident that both sides of the aisle are going to be supportive towards clean burning fuel. And that's exactly what we want to see, because domestically, we're going to use more of our product. If you want to get excited about renewable, get excited about sustainable, because the amount of demand that could come from sustainable dwarfs the amount of demand that could come from renewable diesel. Why? Global production last year was what? Shy of 160 million gallons, all right? What did the U.S. airlines industry burn through? That's the blue column. That's in the month of October. How many gallons is that? 1,000 times what? You're talking 1 billion gallons. So what is the growth potential? Here's why it's the growth potential. Because the preferred feedstock for sustainable aviation fuel is none other than ethanol. Okay? Again, it's going to take some tax help. It's going to take some credits. But I'm telling you, we should see a very strong push for corn-based ethanol here in the U.S. as long as the government stands behind what they've indicated that they're going to do. We should know more about it this spring. I fully expect it'll get passed. The dollar, as of yesterday, looks like it's plateaued finally. The dollar was on a pretty steep uptrend when it bounced off of the low that we made here late in the calendar year, first of the year. We need a cheap dollar though, friends. Why did our exports get so competitive towards the end of the calendar year? Because we were cheaper. Because the dollar is cheaper. It makes our products cheaper on the world market. You look at the nat gas chart. Nat gas plunged into the end of the year. And people were calling me like December the 10th. Why in the world is nat gas so cheap? I said, well, I'm outside feeding my cows right now and I got a t-shirt on and it's December 10th. Why would nat gas be cheap? What concerned me and frustrated me is if nat gas is cheap, what else should be cheap? Huh? Anhydrous. Anhydrous. What was anhydrous in the month of December? Wasn't cheap compared to prepay prices. It wasn't cheap compared to back here whenever it should have been more expensive, right? But the bottom line is this, be real cautious because you see what's happened in the last several sessions. Nat gas has plunged. Why? We're entering back into a time frame with a very mild forecast. Okay? Your anhydrous purchases, if you have not made them yet, be patient. Don't chase $800 anhydrous, is my opinion. I could be wrong, but I do not expect that I will be. Now, what did the University of Illinois say about this particular region up here in the north and what it was going to cost to put a crop out? I don't totally agree with them on this, even though they're a lot smarter than I am. I feel like my average producer, or I know my average producer, saw a lot more relief on fertilizer just as one thing versus their 23 outlay. Okay? I've seen some folks up to $200 an acre cheaper in input expenses on fertilizer alone. Okay? Now, obviously their timing of purchase on 23 crop wasn't that great in the fall of 22, correct? But that's what they're saying, that the cost of production is going to be a little bit lower, which is an issue if the price of corn's down $1.70, correct? Okay? And so this is what it looks like as far as the operator and land return for cash rent for Central Illinois, and this is with a 50-50 rotation. They're saying that the average producer in 23 lost money and that the average producer in 24 is going to lose more money. That's what they're saying. I'm not saying it. What I'm saying is this. It's going to be a major challenge for all of us if we have not adequately managed our risk. If we have high cash rent, and I understand it. I've been there. I mean, if you guys haven't heard me tell this story before, I had a landlady clear back in 2012. And this landlady told me at church, we went to church with her, and she said, you know, I'm praying for you because we had the drought going on. She said, I remember 1954. And I've been in the elevator business with my folks for years, and if I hadn't heard about 1954 3,000 times, I don't know. I'd heard about it a lot, right? I knew 54 was tough. She said, well, I'm sure praying for you. I said, I got crop insurance. I'll be just fine. Don't worry about me. She didn't know how just fine I was going to be because I had fall harvest option. How many of you guys made a ton of money in 2012? Pretty much all of us, right? I know you guys aren't a hand-raising group, and we're talking about church right now. You guys could at least raise your hands one time. Anyway, I was paying her $200 an acre for a prime 40. I went to settle up with her. I gave her an extra $50 an acre. She said, what's this for? I said, I made more money than I ever made in my life this year. She said, okay. She said, well, next year, I think 275 might sound just a little bit better. I'm like, boy, that's what I get for being a gracious person, right? I know cash rent can sting. I know in certain instances it's a necessity. I totally get it. I'm telling you that this is going to be a challenge this year, correct? I think we all know it. That's what it looks like, though, corn versus beans. U of I says beans are going to beat the pants off of corn when it comes to net profit margin. And so what I'm saying is, where anhydrous hasn't been applied yet, considering we're draining our liquidity, equity's still good because we made a lot of money the last 3 years. But we're draining liquidity, yes or no? Yes, we're going to drain liquidity if corn stays at $4.50. That's the bottom line. I think some producers are going to take a look at this and say, I'm going to go ahead and I'm going to go heavier on beans if they haven't put anhydrous on yet. That's my opinion. Now, again, we've quantified more acres for the 24 crop than we typically do because the weather was fantastic. It remains to be seen what's going to happen. But if you don't think this is going to factor into acreage, I disagree with you. Okay? You can't read all that. What is this saying? That it doesn't matter which region you're in. If you're paying average cash rent for your region, you're going to lose money on both corn and beans this year. That's what the U of I is saying. Now, they were talking about this to an extent at the Farm Assets Conference in December. One of the professors is Joe Jansen. The other guy that put this together with him would be Nick Paulson, and then Gary Schnitke. And I told Gary Schnitke, I said, for crying out loud, this is about as depressing as it gets. And he said, well, it might be, but it's reality. It's reality. And so my personal opinion, does anybody ever watch Market to Market? Anybody ever see that show? You know, they asked me a couple weeks ago, do you think we're in a 3-year downturn? That's a tough question, you know, because here's the thing. If we produce a crop this year, what's going to happen? We're not going to rally, guys. We're just not, okay? We're in a situation right now that it could last 3 years. I don't know. I sure as heck need to be prepared for it as a producer, though. And what does it cost? What does it cost to own your commodity as we wrap up? If it's in your bin at home today, it's 3 cents a month for corn, 8 cents a month for beans. If it's in the elevator, 7 or 8 cents a month, 11 or 12 for beans. And so again, just like the producer I talked about in Kansas that was thinking about putting $9 corn in the bin. If I've got corn at the elevator right now and I'm paying 7 cents a month simply to own it, what's it going to take to get the corn out of the elevator? I am not a fan of commercial storage as I sit here today. I think you got to get rid of it. You got to move it. If the corn is in your possession, it's a different story. You've got a little bit more time. How many of you guys like free DP? Nobody's going to raise their hand, shockingly. I always say there's nothing free about free DP. And why? Because if you give someone else your grain and you still own it, and it's not in your possession, what kind of bargaining power do you have? Zero. Be very careful about it. If you want to core your bins, I totally get it, totally understand it. Other thing people keep asking me about, basis contracts. Basis contracts got a pretty bad name towards the end of the calendar year this year. It's a pretty rough go. I understand it. But as we sit today, if I needed cash and I'm expecting a rally, I don't mind a basis contract. I wouldn't go hog wild on it because one of two things is going to happen. Either the market's going to say we're going to give up the ghost and we're going to take this thing to nothing and find a bottom. If that happens and you go down another 50 cents or 40 cents, what will basis do? Basis will improve. That wouldn't be fun if you have a bunch of basis contracts. The other thing that would happen is if you take off on a 30, 40 cent rally, what will basis do? It's going to weaken. It's going to widen. That would be a good time to own a bunch of basis contracts. I don't know which one of those is going to happen. I tend to think that we've stabilized for the time being. Short term, I'm friendly to a point. Long term, I'm bearish if we raise any crop at all. I think some of us, if we don't have corn sold, are going to sell corn across the scale next fall with a 3 in front of it, is what I think. And I know some of you guys are ready for me to leave at this point. I totally get that. I'm just telling you my opinion. I don't know what's going to happen. But what do you think I've done on my farm? I've protected myself, just in case that happens. That's what it looks like over the course of time. Most expensive time most of us have ever seen. I did have a talk with a gentleman yesterday, said, well, whenever we had 18% or 20% interest, what did it cost us to hold on to corn? And I said, well, you got to factor in that corn was worth $2 at the time. Okay? It's the most expensive time we've ever seen to hold on to commodities right now. Okay? So, if you want to question me or talk to me, whatever, that's my contact info. Just take a picture of it. I'm also going to give you the opportunity to get my slides today. I'll give you a QR code here in a minute if you want it. All right, I'm going to go ahead and shut it off. I know we're out of time. I'm not going to leave for a few minutes, but I appreciate you guys listening in today, and I hope to see you again next year.